And YouTube Live. Hey guys, it's Chris Dominguez, and soon to join us is Lee Duran.
Dude,
and we are Chris and Lee.
Soft voice and shit.
We are Chris and Lee.
We're all soft voice. That's better. That's better.
So my power went out last night. I freaked out a little bit, but I grabbed my flashlights, my guns, my foods, and I was ready.
You shoot something?
Nope. But you know what? I love chambering around. If there's something about it.
Why'd your power go out?
Something about it. I don't know. Just city bullshit, I guess. You know how they are. They're just like, hey, Chris doesn't need his lights right now. Or his heater. Or his food to be good. But it's all good. So, everyone out there in internet worlds, if you want to talk about real estate, loans, aliens, what's going on with Elon Musk, let us know your questions. I want to know where you're at. I want to know cities and states. I want to know what you ate for breakfast. I want to know what you think of Lee's t-shirt. Let us know.
What is going on with Elon Musk?
I haven't heard anything about him in the news, honestly. I'm hearing nothing but NFL gossip.
How many kids he has?
9?
It's like that. It's like about
9?
that. Yeah.
Yeah.
It's crazy. And I don't know why, but I Googled it and I was like, how many kids does this guy have? And
is it 9?
Weird. He's like four baby mamas, I think.
Mm-hmm.
And one of them is a weird situation where it was the IT person at, I think it was SpaceX, and the internet says they did it. They in vitroed and got twins, which I thought was strange. But they're not claiming they were ever dated. Okay. Which it's like, hey, I think our brains should make some kids.
Yeah.
What?
He's that guy that doesn't believe that we're overpopulated and we actually need people.
Yeah. Well,
he is that.
Yeah, cool.
What's up, Debbie?
So, what do we got going on? Debbie, you want to buy a house? We're here to help you buy a house. So, pull up the rates.
Pull up the
rates. The interest rates are going down. They did bump up just a little bit. We got alert to lock yesterday. So, bear in mind, in our world, when we get an alert to lock, the interest rates are going to move. But they're not enough to move for the rest of the country because they don't care. You don't care unless you're a loan officer or you're about to lock your rate. If you're about to lock your rate, you really care. But if you're just going, hey, I wonder how the real estate market is, you don't care when we get a 20 basis point move during the day. You don't care. It doesn't matter. It matters when it goes to 50 basis points or 100 basis points. It's going to stick. So when it sticks, then it moves the markets. So we're talking today about buying a house. Talking about
so you know what happened this morning?
Tell me what happened this morning.
So this morning, where we live in Southern California, there's a city called Rancho Cucamonga just north of us.
Is that live?
10 minutes away.
That one is live, right?
Yeah, they're all live.
Okay.
Yeah. They're telling the followers about us.
Oh, okay, cool.
So up Rancho Cucamonga, it's off the 15 freeway and the 210. Okay. They had a little meeting today about the Dream for All. So all the realtors and loan officers and everyone can learn how to do it and how to sell it and how to make it sound pretty and put billions of people into houses. Mm-hmm. And it was a big event this morning. So any of you realtors that were, or anyone that was there at the event that's viewing here, chime in. Let us know what you thought about it. Lee always tells us how he feels about it. My opinion is about it. I do know that it's not for everybody.
It's a program. Well, here's what they're saying. They're saying this program is amazing. It's limited time only. For a limited time only, we'll give you 20% of your purchase price as a down payment. For a limited time only, for a limited number of people, 20%, which sounds great.
Sounds great.
It does. That sounds. If you pitch it that way, 20% for your down payment. Oh, down payment assistance. Sure, we'll assist you. Now the question is, what does assist mean? Assist. If we're going to give you 20%, what? 20%. I've seen loan officers going, hey, this is the only time it's ever going to happen. You really got to get in. You got to qualify. There's only a few of us loan officers that are qualified. And I'm like, well, that's not entirely true. Anybody that's CalHAFA approved is qualified for the Dream for All. However, it is down payment assistance with some really big catches. We'll talk about the catches in a little bit. We got some questions coming in on Instagram, TikTok, Facebook, and YouTube. We appreciate all of you guys. So let's go here. What do we got?
Rady Boy, what's the benefit of an owner's title policy? So the first thing I want to share is the word policy policy. What does that usually mean in our world when we talk about a policy? What does it mean, Lee?
That means that it's insurance.
It's insurance.
You got it. Whew.
So what is insurance? It's just in case stuff. Just in case what? Lee, can you explain to us what an owner's title policy is?
Well, that's just in case the owner didn't actually own the property. In case they...
that doesn't happen.
Wait a minute. What? You sold the property and you didn't even own it. Does that happen? It did for a while.
Yeah,
it happened a lot.
It has.
And this is the whole point of title. Title, when you hire a title company, the title researches what's called chain of title. And they have to make sure that it clearly went from this person to this person and this person to this person, and there are no encumbrances or clouds on the title. And when they do that, they say, hey, listen, we tell you this is a free and clear title. When that happens, well, then you're pretty well assured, and then they have a surety bond on their company. And the surety bond says, if we're wrong, we'll pay for it. So there is a owner's title, and that's going to insure the owner. And then there is a, what's the other one?
Seller's policy, owner's policy.
Yep. So both of these policies are making sure that the title transfers clearly. Cool.
So very necessary, guys. Don't people are like, I don't want to buy that. I don't want to pay for insurance that I don't need. You need it. Buy it. Don't be silly. Navy Mom saying, what's up?
What's up, guy? What's up, Navy Mom?
Navy Mom said you can reach Lee at 323-71144.
I love Navy Mom. She actually said that. She says, hey, you know that there's some people that go on to these lives and they help the people in the chat because we can't stick around the whole time. And if somebody goes through, there's a way to get a hold of them. So she's doing that to help us out. We appreciate you, Navy Mom.
Yeah.
Always appreciate you. Thank you very much.
Maggie.
That's on Instagram, by the way. Instagram, TikTok,
she just
Facebook.
outed Chris's number, too.
Oh, she just put Chris's number.
Man, we love you.
Yeah.
So, Maggie. Have you ever heard the song by Rod Stewart called Maggie?
Yes.
How's it go?
Maggie.
That's the best version
Yeah,
I've heard.
I know, cool.
Always good information. Love your live, she said.
We're here for you, Maggie. Are you in the real estate business or are you trying to buy a house in 2024? Maggie, we want to help you either way. If you're a loan officer, great. We're your competitor, but we can be great competitors.
I have friend loan officers, too.
Lots of friend loan officers.
Workaholic, guys, looking at a home in California for $2 million. 780 credit score, 200,000 down possible. What's your income, though, man?
Yeah, it's going to boil down to income. And so 200,000 down on $2 million, that's a little light because when you get to jumbo loans, they want a lot more money down. You might be able to find a 10% down, which is 200,000 on $2 million. So it sounds great. I mean, $200,000 down, that's amazing. Well, it's relative. So 200,000 is only 10% of a $2 million property. And if you actually put the closing costs in there, you don't actually qualify for any jumbo loans right now. Now, we do have some where you can do an 80-10-10, which means 10% is borrowed on a second mortgage, 10% comes out of your pocket, and 80% goes into the jumbo loan package. That's called an 80-10-10, and those do exist. And yeah, so if you really want to do it, cool. But $200,000 is a great flex if you're buying a $400,000 house. But if you're buying a $2 million house, $200,000 is maybe the minimum and maybe not even enough.
And what if you have a plumbing problem? Have some cash saved, man.
What?
That's a big house.
That's a big house, yeah.
Can you do your own title search, or does an attorney need to do that?
So it's like, can you cut your own hair? You technically, yeah, you can, but there's going to be some consequences if you don't know what you're doing. So a lot of the lenders will not allow you to use anybody that doesn't have the surety bond and the experience to do this because you don't know what you're looking for. In fact, when you do title, one of the first things they're going to do is pull something called SI. SI is statement of identity. And statement of identity is the person's identity that owns the property or is buying the property. We want to see if there's any liens against this person personally. Because if there's a personal lien that can be forwarded through to the house, then the house might have a cloud on the title, which means maybe it has a lien, maybe it doesn't. It's cloudy. We don't know.
Isn't it ironic that we just had a title question last night and then we're having these questions?
Oh,
right
yeah,
now?
we're getting lots of good title questions.
I think it's a setup.
We have some great title people,
I think
some
it's a setup.
really great title people that we work with. And we call them for, some of the stuff we know because we deal with it all the time. But some of the times we just call our people. We're like, hey, what's this answer? What's this answer? Anyway, next.
Mortgage. Rady Boy says mortgage policy for bank purpose. I think he's asking is the title policy for the bank's purpose.
Well, the lender needs to be insured, but you as the owner also need to be insured. And so there's like insurance all the way around. And you have to kind of like buy insurance everywhere. So done correctly, the buyer is protected through multiple layers.
Maggie, trying to buy, but I'm scared. Don't be scared, Maggie.
Don't be scared.
You
Don't
pay
be
rent?
scared.
You already pay rent?
Yeah.
Maybe a
And
little more.
if you can deal with earthquakes, you can deal with buying a house.
Or tornadoes.
I think she said you're in California.
Oh, earthquakes.
There's no tornadoes. You
Perfect
know what?
weather.
I think we did have a tornado. We had a hurricane in California for the first time.
Yeah, it was weird.
Yeah, it was weird.
Workaholic says he makes $600,000 a year.
$600,000 a year puts you in that $2 million range. We got to make sure that you actually clear 600, because we have a lot of clients who make 600 on the top, but after they take all of their expenses, they don't net 600. So here's a little tip for somebody at your level. If you're trying to buy a house, the one thing a loan officer can do is add back in depreciation and depletion. And if you tell your CPA or your accountant or whoever you use that you are trying to buy a house and that the loan officer can add back in depreciation and depletion, then they make sure that you get the appropriate amount of depreciation and depletion in your tax return to reflect your best interest. I hope I said that correctly. That was kind of code, right?
It's kind of code.
Yeah. But you get it. If you're at that level, you get it.
Navy Mom said chrisandlee.com.
Yes, we're badass.
chrisandlee.com.
Yep.
That's time for commercial.
Okay,
man.
cool. If you need a badass loan, call Badass Loan Officer. The phone numbers on your screen right now will get you in touch with a badass loan officer. So this is going to disappear in 5 seconds. 4, 3, 2, 1, bye. Special effect. Oh, that was a twist.
You like that, man?
Dude, that was a twist fade out. Yeah, that was a twist fade out.
Zachary
Cool.
Avalos, what should I do? Oh, these strategery.
Oh my God.
What should I do if I own an FHA currently and I want a multifamily or investment? Strategery.
Okay, Zachary. There's some questions you have to answer, and this is kind of tight. First off, is that your primary residence, and have you lived there over a year? If it's your primary residence and you lived there over a year, well, you can rent it. But that's going to erase your ability to do FHA by and large. There's some exceptions, but for the most part. Yeah, for the most part. So you could refinance that conventional. Make sure the numbers math out. Make sure the math maths. And when it does, it frees up your FHA for your next primary residence. So now you have a loan that's conventional, and probably it's going to be a higher rate because if you've had it for a while, then you have a lower rate. But make sure the math maths out. It's going to free up your FHA. Now, once you have an FHA can be used for 4 units. As long as you live in the primary unit, the big unit is what they call it. Then you can rent the other 3, and I can actually use the rents to qualify you for that 4-unit property. So now you lived in an FHA, got in for 5% down, got some equity appreciation, refinance. Now that's in a conventional loan. You rent it out by the book. You pull in, we do what's called rent-a-meter. We figure out how much money you're making. If you don't have landlord history, the best I can do is wash your loan, meaning that I can only offset what you got, even if you make a profit. I can't use the profit until you have 2 years of landlord experience, but I can wash it. It disappears. And then we move forward on an FHA. You buy a 4-unit, you live in the primary unit, and then you rent the other 3 units. You're in a real estate investor. Wow.
Yeah, and if you do this once, you'll probably do it again.
Yeah.
It's addicting.
Yeah, it is.
Make sure you stay in contact with us as you keep adding houses.
Yeah.
Make sure your taxes are in line to buy the next property, okay?
It gets weird at 4 properties, 6 properties, and at 8 properties it gets real difficult. Once you have 8 properties, most of the loans will step back and say, you got too much risk, we can't factor anymore. But all the way up to 8, we're your guys.
Navy Mom, I'm going to say no. You stay right there on Instagram because you're our Instagram, what would you call her?
Badass viewer?
Ambassador?
Ambassador. Ooh.
Yeah, she's our
ambassador.
On TikTok we have KK. She's our ambassador.
Yeah, she's our ambassador.
On YouTube we have The Rock.
Yep.
And then on Facebook we have, who's our ambassador on Facebook?
I don't know who. Mike logs in a lot for you on Facebook. No, the realtor logs in a lot on Facebook. That one that. Anyway.
So you're our ambassadors.
We have ambassadors at different platforms. The platforms are strange. It's so strange because they're all a little bit different. And I've seen some LOs try and do what we're doing right here: Facebook, Instagram, TikTok, and YouTube. And there's some softwares, but they're not that easy to deal with. So it's a little difficult to get this thing going. We literally have 2 phones and 2 extra cameras streaming to different spots.
3 computers.
And before we start, we line up everything, and I start YouTube, and he starts this, and he starts. So all of this stuff, it's a very orchestrated thing. But anyway, we're here to help you get yourself a house in 2024.
Kind of a cool dance we do every day.
Yep.
Pickles says, "Hey guys,
what's up, Pickles? 667."
Workaholic said it was already included. That was the title question.
Okay,
Zach
cool.
says yes about his property.
All right, good.
Gina says, I like the vibes. Definitely going to contact you guys when I'm ready. Hopefully less than a year.
Gina, he loves Gina. He loves Gina. I was about to say, hell loves you. He loves Gina.
Pretty cool.
Yeah, call us. We're here to help you. He loves Gina. We're here to help you.
User, 100K combined income, no debt, credit score 650 and 680, first-time homeowners. I'm nervous.
You're nervous.
How much do they qualify for? 100K.
100K is going to get you. You'll probably start at about 450,000, and we can probably go up from there. 420, 450, something like that. Veteran, thanks for your freedom. Boom, we're badass. We'll still stand up and fight. You're welcome. Thank you.
User, best advice going through buying a home, a relative that passed away with no realtor per trust.
Trustees. Okay. I gotta math that out. Going through the buying process of a family home of a relative that passed with no realtor per trustees. That's a lot of math. Family home of a relative. Well, no matter what, once they passed, you're in probate. Well, if you're not in probate,
there's a trust.
Well, if yours is a trust, then the trust is going to, now I'm not an attorney, but I'm going to tell you, I've seen this enough times and I've worked with enough living trusts. Upon the passing of the final trustor, the successor trustee takes over. Or the trustees. Yeah, the trustees. The trustor is the creator, trustees the owner. They don't have to be the same. But the trustee is the owner. But then the successor trustee takes over. And if this trust is going to live for any amount of time, then it has to file an EIA number and become a family trust. But if you're just dissolving the assets, then you have to do it per the terms of the trust, and the successor trustee will actually be in charge of executing said terms.
Yeah. So what it sounds like, guys, is someone passed away, the trustees took over, another person not part of the trust wants to buy the house. Just go to the person in charge. They can sell it to you. That's what it sounds like, right?
Yeah, something like that. There's a little bit, there's some, but it gets ugly, man.
Yeah,
trust,
so many
pieces. I've seen so many families dissolve.
That's
over
why trusts
money.
are important.
Dude, they're so important. They're so important. I've seen so many families dissolve. It's horrible.
Elite Fantasy Autos. How can I refi? Bought a property at retail of 100K with 20% down.
Just call us and then we refi. That's it. I mean, if you have 100, you put 20% down, and I'm assuming the property has more than 20% equity. One, why would you want to refi? Are you trying to get cash out, or are you trying to get a better interest rate or lower payment? Now, the reason people would want to refi is because you didn't use a regular conventional conforming. You used a hard money loan or one of these really high interest loans in order to buy the property, which happens all the time. And then you use a conventional a little later to take you out. At 80%, you meet most of the guidelines, even if it's an investment property. So just reach out to us and we'll help you.
Home left to relatives' business. That's the trust one. So I think it's still the same steps apply.
Yeah,
still a trustee.
If it's the business is the owner, then you have to buy it from the business. But that gets real complicated. That gets real complicated. You need an attorney. You probably need an attorney, and there's probably an attorney
that built this.
That built the trust. Yeah, most of the time, unless it was LegalZoom, most of the time an attorney built the trust. But remember that there's entities, and there's going to be a clean trail to the entities.
All right.
Can my husband refinance using his VA loan? Maybe. If it's already a VA loan, then there's a special category for VA loans called VAIRRRL loan. And that's only for veterans. And it's an easy loan. It's easy. It's really easy. So all you have to do is prove that the veteran's going to be in a better status and that they haven't had any lates in the last year. That's it. I mean, the credit score doesn't matter. The income doesn't matter. It just has to say, hey, I used to pay $3,500 a month. Now I'm going to pay $3,200 a month. Then they pull your credit to find out if there's any lates. No lates. Cool. VA Earl approved.
Boom.
Pretty easy to do.
Pickle said we ignored her quote, or his or her quote, but say it again. Let's hear that quote.
What's the quote? What's the quote? I want to hear the quote.
Workaholic. I also have a commercial lot. Would like to get construction loan for a mixed-use building.
Great idea. Great idea. Let us know how it goes. By the way, anybody out there who's actively building ADUs, I want to talk to you. Call me. I want to talk to you. I'm literally building an ADU right now on one of my investment properties, and I want to talk with people that know what they're doing, kind of build a community of people that know what they're doing and build an ADU. I might even build a video series and a channel around it.
Do I hear a business opportunity?
What?
For someone? Is this a business opportunity
Yeah,
for someone?
maybe.
Wow.
Yeah.
Zachary Avalos bought primary residence FHA in 2018, 3.75. I could refinance to conventional to remove PMI, or HELOC to finance multifamily.
Okay, so now here's the thing, Zachary. A lot of people think that PMI is bad, and it's not. Here's why. If I quoted you today, and you had a perfect file today, and I quoted you an FHA at 5.5%, let's say you're perfect, and I quoted you 5.5%, perfect. And then I quoted you a 6% at conventional. Which seems better? It seems that the FHA is better. Okay. But then I told you, hey, listen, FHA has MI that will never fall off at 3.5% down, and you got to pay 0.55. So now you add that up. You go, oh, wait a minute. 5.5 plus 0.55 equals 6.05 versus 6. Now, that's not a big difference. Like maybe $1 most of the time. Maybe $1 a month. Maybe. So in that case, it seems like FHA is the better move, and I want to get rid of PMI when I can. But the truth is, they're about the same. They're about the same. Now there's advantages, because if you get the conventional, then the PMI will fall off at 80% LTV, and there's some other things. But you don't just refi because I have PMI. You refi because the numbers make sense. Yep. And you don't just choose FHA because it's the first-time home buyer, or I'd rather go conventional. You do it because the numbers make sense. Every single time you do it because the numbers make sense. A lot of people think, well, I get my FHA like it's some kind of entitlement to you, and you got to use it one time or you never get it again. It's just a program. It's a program backed by the Federal Housing Administration. And conventional is Fannie Mae and Freddie Mac guideline set up by the government, basically. It's GSE, government-sponsored entity. So you make sure that if you refi for the numbers, not to get rid of PMI just for that one reason. It's got to make sense.
Stop hating on PMI, guys.
Dude.
Would you be able to help with a construction loan? I own land outright. I'm going to stop you.
Okay.
Because I know what the answer is. But I'm going to say, reach out to us, because I think we have an avenue now. I just
What?
found out this morning, yeah.
Really?
I think we have an avenue for construction, guys. I'm not promising, but I think. So
Really?
reach out to us. Yeah. Yeah.
Dude, we're upside down. Dude.
We'll talk about it. So screenshot this.
So if you want to get a hold of us, if you need a badass loan, call Badass Loan Officer. Chris and Lee are Badass Loan Officers at New American Funding. This will disappear in 5, 4, 3, 2, 1.
Got bad at my
Dude,
job.
we were jiving.
I'm
for a while.
hungover.
All right, whatever.
Lady Glam Forever. I want to buy a house in 6 months. I only have credit card. You recommend get like KIK, self-lender? So you want more credit cards? She wants more credit cards, it sounds like.
What is Kick?
It's probably one of those online chime things, you know, those fancy stuff that's going
So
on.
here's what I recommend. You reach out to us and we start your profile, even if it's 6 months to a year from now. What we're going to do is we're going to sit down with you and do an intake sheet. The intake sheet probably takes 3, 4, 5 minutes unless you have a lot of questions. But I'll just do that, and I'll pull your credit immediately. And then I'll tell you what I see. And if I see only one trade line, I'll say, hey, we might want to bump those trade lines up. And what does that mean? That means credit cards, automobile payments, student loans. There's a lot of ways to have trade lines, but you may not know what your trade lines look like. And once I know what your trade lines look like, I can tell you whether or not you can move forward and buy a house right now. I know you don't want to buy a house right now, but I can tell you where you stand. And if you're like, hey, I would like to see another trade. It's not me, by the way. It's AUS, Automated Underwriting System. And that's what almost all loan officers use. They use DUAUS to find out whether or not the system likes your profile. So we'll help you out.
Leah Jade, if you're approved for a loan that's more than what you need, can you use the remaining for closing costs? That's a great question.
You take it.
I was hoping you would, but okay.
Okay.
So the answer is no. Here's why. So you're going to get an appraisal on the house. Okay. So let's just say that you're qualified for $400,000, and the appraiser comes out and says it's only worth $350,000. The appraisal minus your down payment is going to be your new loan amount. So there is no more money above that. Does that make sense? And if there was more money above that, the bank would be letting you borrow more than 100%, which doesn't make sense for them because the risk is way too high for them to do. So the answer is no, but there is strategies that we can use for that.
And then one of the strategies, I'm glad you said that. One of those strategies is called stacking. He just set me up like a slam dunk. Yeah. So one of those strategies is called stacking. Now, somebody will say, hey, listen, Lee, this house, we have it on the market for $400,000. The buyer wants to buy it for $400,000, but nobody can find the closing costs. What we want to do is stack it on top. That's called stacking. So we're going to set the contract up for $410,000, and let's hope the appraisal comes in at $410,000. If the appraisal comes in at $410,000, then the bank will lend the $410,000. And that's called stacking costs, but they're not really going beyond to help you. There's an established value via appraisers of this house, and they're lending to the amount of the appraisal, and the buyer is actually just kind of taking a little bit less than what they could have gotten via appraisal. So that's called stacking. Yeah, that's called stacking.
Rajvinder, share the love.
Rajvinder, thank you very much. We love you, Rajvinder.
Elite Fantasy Autos, yes, the DSCR, and want cash out to get another property. I don't know if did we figure that out?
I don't know.
I don't know if you can cash out on the DSCR, but we will find out. If you want to reach out to us, we'll get you an answer.
Reach out to us.
Colwyn Porter, vet plus wife, 170K combined, both credit scores 600 with 10K debt. Are we ready to buy, and how much?
So vet, first off, thank you for your service.
Yes, sir.
Start with that. Second, VA loan is amazing. It really is amazing. There's only one real downside to the VA loan, and that is what the VA funding fee. The VA funding fee can be waived for a veteran if you're 10% service connected or better. If you don't know what that means, talk to me, I'll help you. But the VA loan is amazing. I will tell you right now that if you gave me that profile and you were not a veteran, I would tell you that conventional's off the table, Fannie Mae, Freddie Mac, Jumbo, USDA, everything except FHA would be off the table for a 600 FICO. But VA does not factor in FICO. The VA guidelines say we don't even look at FICO. They don't. Now the bank overlays, they do factor in FICO a little bit. But the reason the VA loan is such a powerful loan for both the veteran and the bank, the VA steps in and said, hey, listen, bank, if you lend this veteran $400,000, we'll guarantee $100,000 of it. So if he defaults and he doesn't make his $3,000 a month payment, well, you can foreclose on it. You're going to lose about $50,000, and the VA will write the check for the $50,000 to the bank, so the bank's never in any risk, like none, like zero. They can charge all their legal fees, all the foreclosure fees, sheriff fees, everything inside of there, and the VA will cover it. So from the bank's perspective, they're like, hey, I don't care. Default, yeah.
Love it.
They don't love it because they have to go through the process. Yeah, they overcharge for lawyers and stuff.
Yeah, they do.
But the VA steps in and does that. So that's great for the bank because the bank has no risk, which makes the underwriting so much easier for the bank because as long as they meet the VA guideline, then the bank's not at risk. And you know what the loan limit on a VA with no hit against it is? No loan limit. You could buy a $2 million property with a VA loan, a $2 million property, and the VA will step in and insure $500,000 like that. So that's the benefit. But your 600 FICO score is going to factor in the interest rate. Because when you price it, that's when the FICO score comes in. And the FICO at 600 is not going to be great. It's not going to be great. So I would say, yes, you're ready. Let's get moving. But let's also simultaneously go down a path to get that FICO score up so we can get you the house you want.
Right. Tam.
That was a lot, right?
Oh, Tam's the one that said, can we refi using my husband's VA? So
Okay.
now she says, no, we purchased our home without using the VA. Now we want to use the VA. So can she refi using VA?
Oh, all day long. All day, every day. And same process, because on a refinance, the funding fee still kicks in. And the rates are better, though. In fact, pull the rates up real quick.
All right. Here we
I'll
go.
show you.
Boom.
On a 30-year conventional right now, you can get 5.875. On a 30-year conventional, 5.875. On a 30-year VA, you can get 5.5. Now, here's the difference. 5.875, if you have less than 20% equity, you have to buy MI. If you have less than 20% equity VA, no MI. The VA is guaranteeing the loan.
Heck yeah. User, does PMI fall off automatically on a conventional loan?
You take it.
So here's how it works, guys. So let's say you buy your house for $500,000, okay? And let's say, okay, where's my 80% mark? Where's my 20%? 400? Okay. So you buy your house for $500,000.
125.
If you pay your loan down to $375,000, then yes, you can petition to have the PMI removed.
I was wrong. 100,000.
Once-
If
you buy a $500,000 house and you pay it down to $400,000,
Yeah.
then you could petition to get it removed. If you pay it down just a little less to where it goes to 78 loan to value, then it will automatically fall off. So for conventional Fannie Freddie, that's how it works. FHA, you heard Lee say it earlier. It's for the life of the loan unless you put 10% more or more down.
Which for the record, I was doing 25% on VA. That's different
Hey, man,
than
I got
20%
you. You
of
don't have
conventional.
to- you
Hey,
don't have
hey,
to-
hey!
I got
I'm
you.
not insecure.
I
Don't
got
make me
you,
prove
man.
it.
I'm here for you.
I'm not insecure.
Okay, Zachary Avalos. I'll give you guys a call if you're licensed in Texas.
Yes, we are,
Tell 'em about
Zachary.
Texas.
We are licensed.
Tell 'em
My
about
primary
Texas.
residence is in Texas.
Is it?
Yeah, I
None
live
of
on.
us knew that.
I live on Lake Travis.
What?
Yes.
You live with Travis?
Sometimes I don't know, man.
Isn't that what he said, guys?
I don't know.
Now I'm confused.
On the Lake Travis,
I don't even
which
know
is
who
right
I'm
side of
friends with now.
right outside of Austin.
So how's Travis? Hello, said Flex Doe.
Flex Doe 75. What's up? Hello, good to see you.
Dave Perez. I have a 20 FICO. I make cash income. Any help for mortgage?
Oh yes. Now the question is, do you make that cash income and report it? If you don't report it, then it doesn't exist. Because here's what I tell people. They're like, hey, trust me, bro, I make money. But I don't tell the IRS. I'm like, okay, so let me teach you something a little about the loan business. The IRS is the federal government, okay? So you're telling them how much money you make, and you told the IRS, I don't make no money. And then FHA is the federal government. And you're going, hey, trust me, FHA, I make money. Same guy. Well, wait a minute, let's go to the VA. Same guy, government. Well, let's go to USDA. Same guy, government. Oh, you know what? I'll trick them. I'll go to Fannie Mae or Freddie Mac. GSE, government-sponsored entity. They don't own it, but they do fund it. And because they fund it, they control it. So you're still talking to the government. So if you tell the IRS you didn't make no money, you can't turn around and tell the bank you did make money. Because it's not the bank you're talking to. The bank doesn't use their own funds by and large. They use Fannie Mae, Freddie Mac, VA, FHA, USDA, and a few others, but those are all somehow related to the government. So you can't tell the government, I don't make no money. Trust me, I make money. It doesn't work. So if you reported that cash and you told the government you made a lot of money, absolutely. If you're trying to not pay taxes, I understand. I get it. All of us understand that. We all understand. And the one thing you need to understand, this is code. You need to understand that a loan officer can add back in depletion and depreciation. If you have depletion and depreciation on your tax returns, I can take that dollar for dollar and add it back into your income, and we're good to go.
Hang tight, guys. A lot of questions. We'll get to them. We'll get to
Cool.
all of them. Marcus B. Bought a house, hard money. All in, 135K, selling for 220. Not selling due to location. Or are there other options? I think that's a refi.
Move the location.
He has to get out of that hard money.
Oh, hard money. Yeah, hard money. Hard money. Yeah, they get you, man. They get you. Hard money will get you.
What's hard money?
Hard money is, hey, I can't really go through traditional means, so I'll go to a loan shark basically, and I'll get the money, and then the strategy is get out later.
Yeah.
That's kind of hard money.
Very popular for investors. Very popular.
Yeah,
for investors.
but if you get caught, you get caught hard.
Yeah, if you're not an investor and not ready for that
Yeah,
game,
you get caught hard.
Leah Jade, follow the host. Thank you
Thank
guys
you.
for the love.
Thank you, Leah Jade.
Colin Porter, I'm 100% service connected.
Thank you very much for your service. I appreciate you calling. Thank you very much on Facebook, Instagram, TikTok, and YouTube. We appreciate all of you guys. We see the questions on all the platforms. We are trying to get to all of them. And YouTube, dude, we never get anybody watching on YouTube.
The Rock never questions.
Facebook always, Instagram always, TikTok always, but YouTube 2, 3, 4, 5 sometimes.
Dwayne The Rock Johnson, will you ask us a question on YouTube already?
What?
You troll us every day.
Go.
Every day.
What do we got?
Elite Fantasy Autos. Quick question. If using FHA, can I use property as a rental property instead of living there?
So FHA is your primary residence. You must live there for 1 year via the guideline. You must live there for 1 year via the guideline. I have a very, very, very strong suggestion. Do not commit mortgage fraud. They will, if they catch you, it's not pretty. I've seen a lot of people get caught on mortgage fraud. Even loan officers get caught on mortgage fraud. Don't do it. Just don't.
So for a long time, I was like, when I first started the business, I'm like, how do they even find out? How would they know? Well, one way, U.S. mail. Who's getting mail sent there?
Yep.
Second way, and this actually happened to one of my borrowers.
They knocked on the door?
The door.
No shit.
On the door.
Really? Okay.
So if you guys think you can skate this, don't. You'll get caught. We don't advise. Dottie's mommy. Is it possible to get a loan with a 640 credit score?
Absolutely, all day long. All the loans. All the loans. FHA starts at 580 with 3.5% down. Conventional, which is Fannie Mae and Freddie Mac, 620 FICO. VA, no FICO required. And USDA, minimum USDA?
580.
580. So all the loans qualified. Now, that doesn't mean you get the best interest rate, because that's the next part of the conversation. You're qualified, but they're not giving you the best rate. Best rates are 800 plus FICO, but you do qualify.
Yep. Fantasy Autos told Marcos to try selling at Zillow. They have other vendors that give offers. That's someone. That's an avenue. Rajvinder, thank you for sharing. The rest of you, thank you for the likes
We
and
appreciate
love.
you. Thank you, guys. We appreciate you.
Ramiro Dominguez, what about buying land and building instead? Any loans or grants?
We don't know, Ramiro. We don't deal with those types of investment situations as a profession.
Yeah.
I do own a lot of land, and I would like to know about it. So if you find out, please let me know.
Marcos told him, Autos, I appreciate the info. We'll definitely look into that. Good for helping each other out in there. T, does collection affect the score?
Yes. Anytime you did something to violate the trust that somebody gave you when they lent you money, it's going to affect your score, which is going to affect your future borrowing ability. And believe me, I was the dumb kid who said, you know what, the electric bill in San Diego, I'm moving away. I was in the military. I'm like, let them chase me for it. And I went to Florida and Colorado and went all over the world. And then about 20 years later, when I moved back to California, they're like, hey,
remember us?
Remember that bill? Yeah, we never forgot it. And I'm like, well, can you give me electricity anyway? They're like, no, you've shown what you'll do. I'm like, how do I get it? They said, well, first pay us back. And second, give me a $1,500 deposit because you might do it again. And here's the good news. After you show me a year of you not doing it, we'll give you back the money. That happened. True story.
Maggie, how does first-time home buyer work in the States? Do we still have to put money out of pocket? Is she California?
I don't know. Go ahead. Act like she was, yeah.
Might be Dream for All.
Okay.
So Dream for All, this is the Dream for All program that Lee's been talking about. So do you still have to put money out of pocket? Here's where the money out of pocket comes. If the program covers your down payment, then you don't have to pay for that out of pocket. If the closing costs comes through the program, then you don't have to pay that out of pocket. But what every transaction needs is an earnest money deposit. That's EMD. And that's saying that, hey, I'm serious about buying this house. You told me I can. Here's $1,000, $5,000, $10,000, however much you guys agree upon to put into escrow as good faith. So that's where you're going to need out-of-pocket cash. Now, can you use that cash towards the transaction if you need to? Yes. Can you get that back if the program covers everything? Yes. But just know that just because you're going with the zero down program and closing costs doesn't mean you don't need cash. Plus, when you move into your house, you might need some money for the house. So have some cash.
A lot of the programs are going to require 1 month reserve. 1 month reserve means, can I make the mortgage payment if I lost my job the day after I fund it? That's not an unreasonable request, by the way. 1 month reserve. So if your reserve that's PITI, principal, interest, taxes, and insurance, if it's $3,000, they want to see you have $3,000 in the bank. Short of that, they're giving you everything to get the loan. So it's not an unreasonable request.
Tam, how does home equity lines work in Texas? I need money, but I don't want my mortgage to increase.
You go.
All right. So home equity line of credit is a HELOC. It's basically a credit card. So it's a credit card attached to your house. What you'll do is you'll get approved for an amount. Let's call it $100,000. Okay. Let's say you don't use a dime of it. You don't have a mortgage payment. Yep. You don't have a payment on that piece, I should say. Mm-hmm. So let's say you access $10,000 of it because you want to buy a quad. So you had a $10,000 loan out. There's a payment on that $10,000. Let's say that you need to go to a fancy dinner and go to Las Vegas. You take another $5,000 out. Now you have a $15,000 loan. And then once you pay that down, you're at zero again with the $100,000 available.
I want to see the quad for $10,000 because that's a nice quad.
Also, if you don't use it, you can lose it. Just like a credit card.
Yeah.
It's just like a credit card, guys. So that's how a home equity line works. It's separate from your primary mortgage, but it is attached to your house. Mm-hmm. So if you sell, refinance, or try to do anything with whatever, it will pop up. It's a lien. Okay. Sorry, I meant does a collection affect approval? I have a 650 with no debt, one collection $40,000 down.
So it's going to depend on what type of collection. If it's a child support collection, yes. If it's an IRS collection, yes. If it's just a regular Joe Schmo car collection, it won't stop you. I just have to factor in. There's a 5% rule. There's a 1% rule. There's some different factors. And what that means is whatever you owe, I must take 5% as if you were making a monthly payment and count it against you.
Ridiculous. People still have that money. Reserve is fine, but earnest with this program? With every program, man. With every program. You got to put, people don't trust nowadays. So money talks and BS walks. Wow. So you got to put some money into, not everyone takes a deposit or needs a deposit. Mm-hmm. We have had some agents negotiate zero deposit.
Zero deposit.
So it's not a have to, it's a negotiation. So if you got a good heart and the approval, okay, here, let me take it a step further, okay? So with us, there's 3 levels. There's pre-qualification, there's underwritten, and then there's an underwritten cash program, okay? 3 different levels. So if you have an underwritten cash program where we say, hey, we're going to buy this house cash, we've already been underwritten, this is good as gold, and you can negotiate a zero earnest money deposit, that is possible. But if you go in with just a pre-qual, which most lenders around the country do, and they say, hey, just trust me, this one's good, they're going to ask for a deposit. So 90, a very high percentage of people are just going to be pre-qualified.
Questioning yourself. Quit questioning yourself.
I don't know the exact, that's why.
Well, let me hit it from a different angle.
Okay.
So if you're the seller, let's say you're the seller and you want to sell your $500,000 home, and there's like 5 people that are trying to buy your $500,000 home. And one guy says, hey, I want to buy full price. And so do all 4 of them, all 5 of them. All 5 say, I want to buy full price. But you come in and you say, hey, I want to buy full price, but I don't want to put any money as an earnest money. So please take it off the market. And trust me, I'll be able to fund the loan. The guy right next to him says, hey, I'm willing to put $10,000 down as earnest money. If you're the seller, which would you choose? Same offer, same price. Somebody walks in with 10G and says, hey, if I default on you, you keep this 10G. That's it. From the seller's side, that's what it looks like.
Yeah, but if you don't want to do a deposit, you got to get the highest cash, something that's really gold. Yeah. Ridiculous. It's sad because rent is so high and cost of living is crazy, so saving money is hard.
It is, Maggie.
Tell me about it.
It's hard in this world. At every level. I've seen really rich people not be rich at the end of this year.
Mm-hmm. Miguel Reynoso, how much does a mortgage broker make off the deal? And who pays for it?
Good question, Miguel.
Finally, Miguel.
Finally, somebody just go to brass tacks. Yeah. How much money you make, Sweetie says. How much money do you make?
I'm going to settle in while he goes.
All right, so this is going to go into a rant. It's going to go to a rant. We're going to go to a rant. How much I make. So there's a lot of money in the business. There's a lot of money. I'm going to give you too much information here, okay? Usually your loan officer is going to make between 30 and 300 basis points. What does that mean? Holy shit. Well, 100 basis points is 1%. So if the loan was $500,000 and your LO was on a 1 basis point payout, he would make $5,000. If he was on a 30 basis points, he would make, how much would that be? 2200, 2200 maybe, 2200. So he would make what, 22? You're right, a little less than 2200. So he can, but if he's a 300 basis point payout, he makes $15,000. So wait a minute, what's the difference between 2200 and $15,000? And that's where you get into the loan officer styles. So the best way to make 300 basis points for a loan officer is you go work for a broker. If you work for a broker, the broker will say, hey, listen, I'll bring you on, Mr. Loan Officer, and I'll give you these 5 banks that you can shop at 300 basis points, which means you make $15,000 every time you close that loan. Now, who pays for it? The client does in the interest rate. Now, you can go to the lower level, and this is going to be your Rocket Mortgage or something like that, and they pay those loan officers minimum wage, $15 an hour, or whatever minimum wage is, and then they pay them 30 basis points on every loan they fund. So they only make $1,800 a loan, maybe less. Sometimes I've seen places where you make $300 a loan, but you have to fund 50 loans a month. So that's the lower end. The way we work, the system we chose is a direct lender. On a direct lender, you can choose your payout, usually 80 to 100 basis points. So you make 100 basis points. So if we find that $500,000 loan, $5,000. So that's a lot of room, but this is why the LO that you choose really counts. Now, that being said, is one better than the other? The brokers will know how to sell it. They'll say, hey, listen, I'll shop you against all the lenders. And that's not a lie, it's true. But the part they didn't tell you is they chose their commission off of lender A, B, C, and D at 300 basis points. And they chose their commission off X, Y, and Z at 50 basis points. So depending on how they feel about the deal and which way it goes, they can choose how much money they make. As a direct lender, which we're direct lender, we don't get to choose. We make X every single time. We don't get to change it.
SOL. Do you
Wow,
guys do hard
that's a
pull
lot.
or soft pull for the application?
Hard pull every time. Soft pull doesn't really count.
We can do soft pull, but doing soft pull doesn't always give you the right data.
It's not, yeah.
You can do soft
yeah.
pull. But here's why you guys are asking this question. Let me elaborate on this.
Okay.
So the reason why Soul's asking this question is because people think that pulling your credit affects your score. Okay. They're like, well, I pulled my credit here and it was a 650, and then I went over here and now it's a 640. Okay. Here's what happened. If you're not out there pulling your credit like crazy, here's what happened. If your credit's on an upward trajectory and you pull it here and then here, it's going to be higher. If you're on a downward trajectory, you pull it here and then here, it's going to be lower. You know what's going on with your credit. If you, like Lee says, you earned it. So if you earned an 800 credit score, you know what's going on with your credit. If you earned a 450 credit score, you know what's going on with your credit. So when you ask about hard pulls and soft pulls, that's what you're talking about. But here's the truth. If you get a soft pull and we approve you off a soft pull, it may or may not be accurate.
Yeah, probably not. And
but
we couldn't approve
you. It's going to be gold. It's going to be gold. So if you're talking about a house and you want to buy something that's worth hundreds of thousands of dollars, don't play games. Do a hard pull.
Yeah, and by the way, when you're pulling your credit, if you're an 800 guy, you know you're an 800 guy. You guard that thing. You don't want anybody pulling it. I talked to many 800 FICO guys. They're like, I don't want you to pull my credit yet. My answer is simple. I won't pull your credit. I won't pull your credit until you tell me yes. But I know that mindset. And the guy who's got a 500 credit, you know you have a 500 credit score. Come on. Because they'll be like, oh, I want to buy this house. I want to buy this. Oh, the thing is my credit. You see, there's some people I didn't agree with, and they told me some bullshit, and somebody did me, and this. And I'm like, yeah, okay, cool, fine, whatever. Let's just acknowledge it, and let's fix it. That's it. If you try and do this, and hey, it doesn't exist, it will exist. There's no way around it. You earned your credit score. You earned it. If you didn't pay the bills, if you walked away from Verizon, if you walked away from the electric company, you earned low credit. By the way, most of us were young, dumb kids at one point, and we all did it. We're like, hey, chase us. We didn't know they were actually going to chase us. And they did.
Yeah.
Cool.
Thank you guys for the love. We got likes.
Appreciate you guys. Yes.
Keep liking this. Keep hearting this. Keep sharing this so that we
Facebook,
can get more people
thank you very
involved,
much.
guys.
Facebook, thank you. Instagram, thank you. TikTok, thank you. And YouTube. Few of them. Thank you.
Becca Stern.
What's
Can
up?
you explain buying down the rate?
You go.
Okay. So when we have a file in front of us, we'll get a sheet. We literally get a sheet of interest rates, and everyone asks, "What's today's interest rate?" And today's interest rate is the rate that doesn't cost you anything, and the rate that doesn't give you any money back. That money back is called a rebate. So call it 0. Now, let's say that the par rate is 6, and I go to 6.5. Well, if I take your rate up, there's going to be money there. That's a rebate. But you say, "No, Chris, I want a 5.5. If I take your rate down to 5.5, there's a cost for that." So that's buying down the rate. So depending on how much money you want to invest in this, we can buy down that rate. But right now, probably isn't the best time to buy down the rate unless you have to. The files we're building today, some people have to buy down the rate to squeeze into that house that, whatever price it is. But if you don't have to, you can keep that money in your pocket, and then in about a year, rates are supposed to improve really good. You could do a refinance and bring that payment down. I mean, like way down, and not have to invest as much money. But even then, if you still have that cash, you can then do a buy down to get an even better rate. This is what we did when the rates bottomed out in 2020. So definitely a good strategy. You might want to look into it.
Thank you for the thumbs up on Facebook. I saw you guys on Instagram too. Thank you for the thumbs up and the hearts on TikTok. Somebody's hearting us up like a big.
I love it.
Thank you very much on YouTube. Still only a few people on YouTube, but we love you on YouTube too.
I'm telling you, Dwayne Rock Johnson.
I guess so, man. I
Ask
guess
us
so.
questions.
Cool.
Do your credit go up after a home purchase?
After you've made a few payments, yeah, it starts
There
to
you
go
go.
up. After
There
you've
you
made
go.
a few payments, yes, because it's a very large amount. You borrowed $500,000 and you're paying on time. If you don't pay on time, it goes down, by the way. If you pay late, it goes down. But if you pay on time, yes, your credit score starts to go up slowly.
I messed up, said Miguel Reynoso. I had a mortgage broker pull my credit for a loan. He approved me for $700K as a first-time home buyer.
Oh, Miguel.
Why'd you mess up?
Yeah,
'Cause
why'd you
didn't
mess up?
use us?
That's probably why.
Is that why?
That's probably why.
Well, here's the good news, Miguel. If you didn't buy the house yet, you can still use us.
Yep.
So give us a call. Let's see if we can compete with what this guy's doing for you.
All right,
okay?
cool.
So, I seen some TikToks, guys saying South Pole was the accuracy on the loan amount. Shaking my head. Thank you.
Well, let me tell you how it works, Sol. Here's how it works. These are 3 independent bureaus. They're independent. They try not to talk to each other. It's a little complicated, but they try not to talk to each other. TransUnion, Experian, and Equifax. They try not to talk to each other. And when I pull credit scores, I can literally have a 720, a 640, and a 610 come in. Three scores. Now, if I did a soft pull, I could have pulled a 610 and said, "You're not qualified." Or I could have pulled a 740 and I could and said, "Yeah, you're way qualified." But the truth is, unless I have all 3, I don't know what you're really sitting at. So the mortgage industry, we do a tri-merge, or we take the high, throw it away. We take the low, throw it away, and we use the mid. So if somebody's just doing a soft pull, whoever they're contracted with, they're going through Equifax, and then it's a soft pull, which means it doesn't hit your hard credit pull, but it's also a false positive or a false negative.
Also, let's say there's Experian, TransUnion, and Equifax. Let's say that we're not pulling in Experian. Okay, we're just not pulling in Experian, just TransUnion and Equifax. What if you had a debt that was just with Experian? It's not going to factor in this file. It might be a $200 payment. You may not qualify for the house anymore. So do it once, do it right. That's all. That's it. Okay, I've seen guys on TikTok.
Okay.
What's the best advice to get it through a mortgage broker?
Oh, God. I'm about to get Dirty Birdie, and they're probably a mortgage broker because you know to ask this question, but I'm going to piss you off, and I'm going to teach people. I'm going to piss you off, or I'm going to help you, one of the two. So here's what happens. The mortgage broker, once he's got you set on a 30-day escrow, he's going to say, "Hey, I don't want to lock it. I don't want to lock it. I don't want to lock it." You know why? Because he knows he could shop you. You could shop him. So he's not going to lock. But the minute he locks, it's committed. You have to. Now, you get that locked rate and you shop it. You call us and you say, "Here's the locked LE." LE is loan estimate. It's a legal document that all lenders have to give out. So here's the locked LE, Chris and Lee. Can you beat it? So I'll get the locked LE, and I'll see a loan officer's NMLS number at the top, and I'll see a DU with the lock on it, and I'll go, "Cool." And then I shoot it up to my bank, and I say, "Hey, we're fighting against the Purple Bank. Can we beat them?" And depending on the mood of the higher-ups at New American Funding, they'll decide, "Hey, yes, I am going to lose a little bit of money on this because we're going to make it up on servicing over the next 30 years. So they will lose it. But here's the game. The game is that mortgage broker won't lock until it's really close to the end of close of escrow, because he knows this is the way to keep him from losing it. And if he's making that 300 basis points that I talked about earlier, he doesn't want you to know it, and he doesn't want you to shop him. And when he does, he'll give you an LE. He said, when you say, hey, I need an LE, he'll move it to another lender and give you the LE off the other lender, and you got a better rate that way. So you shop them, but you shop only a locked LE, only a locked LE.
Miguel Reynoso, I don't think I'll be ready in 90 days. How long do I have to wait to do it again? This is the guy that went to another broker.
Okay.
So I don't know what you're asking, but if you want to get pre-qualified, you can get pre-qualified right after. There's no 90-day window inside of there. So I don't really understand what you're saying, but we can help you.
Yeah, we'll help you. And if you, we have many clients that sit on the sidelines for years. I probably have hundreds, if not thousands, of clients that are just humming in the background right now, waiting for the rates to go down so they can buy a house.
All right, Moni. She said she just finished paying her car, looking into buying her first home now.
Let's do it, Moni.
Time for a commercial.
If you need a badass loan, call Badass Loan Officer. Chris and Lee are your badass loan officers at New American Funding. You can reach Chris and Lee by calling the phone number on your screen. You need to screenshot it because it's going to disappear in 5, 4, 3, 2, 1. Twist, fade out.
Try to be fancy.
Twist, fade out.
Try to be fancy.
Dude, twist, fade out.
What if I have zero credit?
If you have zero credit, email eso? Email eso? Well, if you have zero credit, like zero, like no credit, we have something in the lending industry called alternative credit. Alternative credit, which means I get to prove that you pay your bills on time. How do I do that? Oh, wherever you live, you pay the electric bill, right? You pay the water bill. You got to pay for gas. You got to pay for trash. You got whatever you pay for. I just say, hey, go to your electric company and have them send me the last 12 months of payments. Wait, what? Yes, it's called alternative credit, and we do it occasionally. Now, that is not an alternative to credit, because if I pull your credit and I have a 442, and you go, you know what, I'd rather use alternative credit, you can't. You literally have to pull your credit, and it has to say no credit. And if it says no credit, then you open the door for alternative credit. Yes, we can do it.
All right, guys, I need to take a moment real fast.
Okay, cool. Take a moment.
Karen Dazal is in the house.
Karen Dazala, what's up, KDZ?
Let me share something with this world.
Share something.
I'm glad a lot of you are in here right now, and here's why. So, Karen Dazala, rock star agent, Southern California, and
Arizona. Arizona. Don't forget Arizona.
I don't forget.
Dude.
Rock star agent, okay? This woman knows her stuff. Knows her stuff. Knows her stuff. You know what she doesn't do? She doesn't make it look like she knows all about mortgages. She's here enjoying with you guys, learning. And same thing on her side. I don't know everything about her career. There's so much that she knows that I don't. And there's these people walking around as double agents.
Oh, yeah.
They're loan officers and realtors. You know what I would never do?
And
be a double agent.
And
you know
bartender and haircutter.
Yeah. You know what Karen Dazala would never do?
Yeah.
Double agent. Why? Because as seasoned pros, we know our vertical very well. Yeah. And to put two of those together is insane. Yeah. Insane.
But you make more commission. If they can get you, if they can get the right client, they make a lot more money.
Yeah. That being said, you guys need a badass agent here in California or Arizona. KDZ's the lady. Yep. The Jenny Lynn. Is there an app you prefer to monitor your score? Credit Karma, Wallet Hub, Credit Complete ID, etc. I use Credit Karma. I have Credit Karma. It's a good monitoring service. I don't know about all of them, to be honest with you. I don't get involved in them. I have one. Good enough. What do you think?
I'm not a fan of those things very much.
Why?
Because if you have good credit, you know you have good credit. You know it. I know I have good credit. I know. And then I go to Experian, TransUnion, and Equifax, and I lock all three. Why? Because if I'm going to pull my credit, I'm going to authorize it. I'm not going to have somebody trying to sell me credit cards or trying to sell me automobiles or whatever. No matter what, I control it because I understand how important it is. So I do bank with Wells Fargo. Wells Fargo says, hey, I can give you your credit score. And they kind of try and sell me credit cards every once in a while. But I'm just not a fan because as you build that credit up and because you know, when you get on in life and you understand how important your credit is, you know where it's at. When you're young and dumb, you're like, well, I think it could be bad. Come on.
Let me give you my perspective, okay? Because I actually have it. So I'm a credit card enthusiast. I'm an enthusiast. Why? Because a lot of these credit cards give you a lot of benefit. Air miles, cash back, a lot of different benefits. And what Credit Karma does is it outlines all the different cards with all their different benefits. So if you're a junkie like me and you're looking for one specific thing on a credit card, Credit Karma will show you. So I'm not trying to sell them. So I don't even like them.
We got a speed round. Thank you very much on Instagram. We see you. Great info. We thank you very much. Facebook, we appreciate you. Thank you for the thumbs up. TikTok, all the hearts. We love you guys. Thank you for the follows. And YouTube, couple there still.
Yeah. So, do what you guys will.
Okay, speed round. We're about to bolt out of here, but we're trying to get you a house in 2024. Trying to get you a house. So we're about to speed round. We are going to answer the questions quickly. Go.
So, time gap you suggest for me to try different lenders?
There's 2 time frames to do it. One is within 2 weeks of each other because they know your shopping rate, but don't go to too many because it'll actually hurt you. Or wait 30 days and then find another lender. One of those 2.
KAG 711. What about lender fee?
Lender fees, they charge fee all the time. Right now, our bank is offering, if you do a refinance within 5 years, they'll waive the lender fee, which is not a free loan. That's how they sell it, but it's not a free loan. There's still title and escrow. Lender fees, they're a way to hide costs to the person who's buying the house.
VRV, do you have any recommendations for credit repair services?
Yes, we do. We actually got one on our links at the top of all of our profiles, or you can call us and we actually call people and talk to them and check on them, make sure they do a good job.
KAG 711 and rate. That's the one I asked about lender fee.
And rate?
Yeah. What about lender fee and rate?
Rate is based off of your credit score, debt to income, loan to value. Everybody's rate is going to be a little bit different, but it's going to be in a range.
Jessica Rojas, you guys are hilarious.
Ha Jessica Rojas. You know who that is, right?
Yeah,
we used to work with her for years ago, right?
Years ago.
Badass girl.
Great info here. Thanks, Jessica.
Yeah, we appreciate you. We appreciate you.
Moni, will you guys help buying a house in Visalia?
Oh, yes. We will help you right now today. Contact us. We will help you. Hey, we've been Chris and Lee. We appreciate you guys. We'll be back.
Cheers.